Ed Von Runnen, thank you for taking your time today to talk with us. Our purpose is to use your expertise, your knowledge, your experience to help educate others about real estate investing. So tell us a little bit about yourself, if you would.
Well, I retired about 5 years ago. I bought these two places in Santan Valley about 16 years ago, I guess by now.
Okay. Yeah, I think it was 2004 or something, wasn't it?
The end of 4 and the beginning of 5. I think the end of 4 was the two in Santan Valley.
And that was before the market crashed.
Yeah, it wasn't the high point, but it wasn't the low point either.
Exactly. So you're retired now. Where do you live now? What are you in Arizona?
No, I'm in San Jose, California.
You're in San Jose. Okay. And you were just telling me why you chose to invest in Arizona real estate. You want to recount that quickly for us?
Yeah, the broker at the time that I had recently refinanced my primary residence with was researching Western states, mainly looking for areas that had low purchase prices for homes versus high rental incomes, so that they could be less negative than other places, I guess.
Did you use financing when you purchased them?
Yes.
And do you still have financing on it now, or the tenants paid it all off for you?
Well, they've been paying it off for me, but they're not paid off. However, I'm at the point now where they're all adjustables, and they're only like 2.5% and 3%, which is unheard of for investment properties.
Yes, true.
And so I suppose they'll go up a little bit this year, but still very, very good interest rates. Less than a third now is going towards interest.
Great. So you're tracking that. That's great.
Oh yeah.
So share with us a little bit, if you would, your investment philosophy. Obviously, it started out with an idea of buy low, sell high, or maybe not. So talk to me about your investment philosophy, if you would.
Well, with those particular two homes, that was the low purchase price versus the higher income. The spread for the rental income was high versus the low cost of the properties at the time. But
why real estate?
Well, back when I did all this, I bought 4 properties over about a period of 4 months, the 2 there, the 2 in Santa Fe. That's back when there were no doc loans. So it was pretty simple to do. And I had been with 3 separate investment advisors at the time, and I was unhappy with what they were doing.
Are you talking about the stock market?
Yes.
Okay.
Yeah. And these were fee advisors, so a lot of it was just going to their fees. So I just got disgusted, and I cashed it all out and went for all the real estate. And in hindsight now, that was a very good move.
Yeah, you've seen property values increase pretty fast over the past couple of years. So that's built equity for you. I know that we have had a scenario with your property where the tenants caused a flood in the property. We had your appliances got stolen. Somebody actually lifted one of the Arcadia door off the back and took the appliances out of the property while it was vacant. Those are significantly negative experiences, yet you stayed with it when many people wouldn't have. Tell me about your experience there.
Yeah, that's probably the worst experience I've ever had with any rental property. Those people were very unique. Uh,
Think
but
who ended up evicting them?
I mean, the insurance covered the majority of it, so it's just part of dealing with being a landlord, I suppose.
Mhm.
I didn't get discouraged by it because the majority of the people that I've had since have been fine, and at other properties too.
Right, right. You know, I had a situation where the tenant flooded my property and the insurance took care of that too. The tenants thought that they were getting back at me for making a move out because they weren't paying rent.
Yeah,
And what actually happened was they allowed the insurance company to pay to remodel my house. So worked out worked out pretty well.
yeah, that was the same situation here. Just nasty people trying to get even.
Yeah, yeah. So talk to me about tax deductions or that kind of thing. Do you take advantage of those?
Oh yeah, I take advantage of everything I can. And now because there's so less interest, I have to be really careful about what I can find that I can use.
Yeah.
And of course, when I take a road trip down there, I deduct everything I can for the road trip, which is the majority of it.
Yes. So it sounds to me, based on this conversation, you're investment savvy, whether it's the stock market or the real estate market, or at least say more savvy than most. Who taught you that?
Trial and error, self-learned.
Really?
And well, and Kiplinger's magazine is a good resource.
It is.
Various various columnists in the local newspaper here over the years. It's just been a little bit of bits and pieces, but self-learned, trial and error, mostly successful, not error.
As we wrap up this conversation, and we're looking and saying, you know, our purpose in having this is to educate others based on your experience, the wisdom you've acquired, and the knowledge that you have. What would you say to other people that are considering investing, considering a property management company, considering the whole ball of wax with regard to real estate investing?
Just real estate investing?
Well, no, we can go as big as, let's go big, because what we're really talking about is creating financial security, aren't we?
Well, I had an inheritance back in 1992. So I started with 3 separate fee advisors.
Mm-hmm.
The kind that take like a 1% or 1.5% of the total.
Right.
And that's what I was not happy with, but I didn't know enough at the time. So I had them handle it and I watched the results. Didn't like it after a few years. And that's what got me into, after several years. And then that's what got me into real estate.
So Ed, one of the things you just said in my words is that I hired some professionals to take care of my money. They charged me based on the balance of the money that I had there. And my return on investment was not acceptable for the charges that they were making.
Correct. If it had been based on what they gained for an investor, you couldn't argue with that, but it was a lot of sales fees and commissions that they were getting for trades, and they're 1 or 1.5% of the total balance that just sort of chipped away at the balance, and it just didn't make sense.
And then in addition, you've acquired 4 other properties. I took a look at the properties, just the ones that you bought here in the Phoenix area in Santan that we manage. And it looks like you're up about $400,000 in equity on those properties, just from the appreciation, plus whatever pay down on the mortgage that's happened over that period of time. And they continue to create positive cash flow for you.
Yes. Yeah, they've done very well.
Anything else that you'd like to suggest to potential investors or people considering investing using property managers, all of the above?
Well, you guys have done a good job for me
Thank you.
at a reasonable rate, and handled everything very well. Geez, I don't know. I'm not sure how to answer your question there, because it's been so long since I got involved with you guys. It's, and again, I think it was Quincy that originally was the one who
Yes.
was responsible for getting you guys involved there.
Well, I appreciate that. Well, what I'm hearing from you as I'm observing the conversation is that as an investor who is looking to take the resources and create something and create more, create financial security, that paying attention to the return on investment and having a big picture view of the investment is important, and that's what you've been doing, even to the point of experiencing some negative situations with a tenant that thought that they were going to get you, and it turned out other than what they were thinking.
Right.
So that's what I'm hearing you say. I'm hearing you say that that's important. Also, how about the diversification of stock market and real estate?
I like real estate because it's always solid, unless you end up in a bad area somehow. And I like the stock market, like what Vanguard is doing with a lot of my assets too.
Do you feel like the stock market's going to continue to do what it's been doing in the last few years? Because it's been pretty strong.
I think it's going to stall for a while, but eventually it does. It's doing 10% average over since what, 1929 or whatever, since they've been tracking it. It does a 10% average a year. So if you're not nervous about the ups and downs, there's no point in worrying about it.
Right. Excellent. Well, Ed, I appreciate you taking your time to have this conversation with me. Any final thoughts?
No, I would just hope anybody that's getting into investing would do plenty of homework, research.
Yeah, that's great. We try to do that and provide. Just curious, do you watch the periodic videos that we put out on the real estate market or investing? Have you had a chance to do that?
I did that about a week ago for the first time.
Oh, okay.
I looked at one of your most recent ones there, and it's very interesting what's going on. So increasing, I couldn't, when Katie got a hold of me about increasing the Halflinger property rent by $340 a month, I almost had a fit. And then I had to go look at comps on Zillow, and I had another fit because I couldn't believe how high those rents are going.
Right. Appreciate you taking your time and helping other people by sharing your thoughts and your wisdom.
You're welcome.